Welcome to Generational Wealth. In this video, we will go over the golden ratio Fibonacci retracement. So, if you have not already watched the previous video I put out on this, I also have a course that goes more in depth on this on the website. You can find down here at the bottom, Generational Wealth. Team Generational Wealth 4x.com, TGW4x.com. And then over here, we have the Telegram channel. So go ahead and join the Telegram channel. So what do you need in order to understand this strategy, this Fibonacci retracement, and understand this? First, you need to understand market structure. So we know the market structure consists of the weekly and the daily structure, right? So now the weekly and the daily structure, of course, revolves around Sunday, Monday, Tuesday, the trend reversal, Wednesday, Thursday, Friday. And the daily, of course, revolving around the trading sessions and time zones, which is also on here. So, of course, manipulation, you have to understand manipulation as well. Because if you do not understand the manipulation behind what's going on, that's going to be kind of difficult to understand as well. Also have a video on that as well as market structure and manipulation in trading sessions as well. So trading sessions, Asian session, London session, and our New York session. Asian consolidation, London breakout, then a New York reversal. So these trading sessions is important. You need to know the time zones. You need to know that time that market opens. You need to know when that market opens. The reason why is because that's when all the activity is going on. And mainly it's London and New York session where all the liquidity is at and all the moves are at. So anytime you want to trade, it's going to be around London session or New York session. Now, Asian session, you can catch some moves, but you have to understand that is a consolidation period. So the market is choppy. It's just going up and down for a certain amount of time until it reaches London session, which usually revolve around the breakout and then New York session to reverse it. So as well as learning and understanding the basics of support and resistance. I'm pretty sure everyone should know that by now if you're trading. That is one of the main things they kind of manipulate you on when starting to learn how to trade Forex is trading support and resistance. Now, I do not trade support and resistance. I call them zones. I just kind of identify that area. It's just an important area to identify, nothing else. You don't need to necessarily always trade on it, but sometimes we will use that in this strategy with the Fibonacci on trading off support and resistance zones and understanding. So furthermore, let's begin. So one other thing. So now, if you have not checked out the video, like I said before, on Fibonacci, go check that out first. So what I have done already is, now this is my main chart. I kind of like to keep my drawings up when I'm actually trading. So what I have done is I erased a lot of stuff off of here so it won't confuse you. So hopefully what's already on here don't confuse you already. So what I have identified for you to pay attention to is these yellow circles, okay? And those yellow circles, right, I'm going to show you how to get in on those entries. So if you see these entries on these yellow circles are flawless, right? They put you right in the market once it moves, right in the market once it moves. Also, if you see the yellow circles, you see these vertical lines I have. You have the pink one that represents the opening of London session. The blue one represents the opening of New York session. Okay, that is very important because like I said, trading around these time zones, as you see, like I said before, just from looking at this, you can see that the market is moving around London and New York. That's when the moves are happening. Then it goes to Asia to consolidate. London and New York is the moves, okay? So you also see the pink and blue vertical lines represent the London and New York, New York session. Then I'm gonna show you how to get in on these entries at these yellow spots, right? At these yellow circles. So first, I got a lot of support and resistance lines, which is these black horizontal lines that's going across here. So some of those are actually from me drawn on the 1 hour time frame as well. But this particular video, I'm gonna show you this on the 4 hour time frame. Now, why am I gonna show you on the 4 hour time frame versus the 1 hour, 30 minute, or 15 minute? Now, I believe the previous video I did with this was recorded on a 1 hour time frame. I'm pretty sure it was. If not, I know the course that I put out on the Generational Wealth website is pretty sure it should be the 1 hour. But keep in mind, you can do this strategy, this Fibonacci golden ratio retracement level on any time frame. Literally, you can do this on any time frame. You just have to understand those key points that I just told you of going over market structures, time sessions, the trading zones, the time, understanding the daily and the weekly, understanding the basics of support and resistance, and then the manipulation behind this. And there's videos on all that. So, so let's begin. So, golden ratio. The golden ratio stands for the actual Fibonacci of, let me draw it out and pull it out real quick so you can see, 618. Okay, this 618 right here is the golden ratio. Now, if you have not or have not anything about the 618, the golden ratio, go YouTube it, go check it out. The 618, that measurement revolves around everything in life, and it's actually a natural number that where when you take certain numbers and add it on, it's going to end up eventually revolving around the 618, the 0.618. So go check that out. It's a very interesting video. Once you start to learn about it, you understand more that this actual tool is very useful when trading. So before we begin, I want you to understand I draw my Fibonacci opposite of what you might have learned or been taught or shown or watched or seen or anywhere. I do it the opposite. So usually they go from the bottom to the top high. I do it different. So what I do on an uptrend like this, like such, I take from the top. Yeah. So what I do is I take from the top, and then I drag to the bottom on an uptrend. That's what I do to get my Fibonacci retracement levels. I drag from the top and I drag it all the way from the top to the bottom. So I know what they'll teach you normally is you, for an uptrend, you go from the bottom to the top to get your levels. That's not how I do. So let's begin. Let's get it cracking real quick. So when trading, we know that a downtrend creates lower highs and lower lows, lower highs and lower lows, right? Like we see over here, kind of going on, lower highs, lower lows, and then the uptrend, high highs and higher lows, right? So when it changes, when the trend reverses, right, the last spot we seen for a downtrend was the last zone. We came down here and it stopped. The previous zone before that, right, was right around here. Okay. So now what we want to do at that point is, being that the zone is right around here, so that consists of this area, this whole area right here. Okay. That's what that consists of. Like I said, some of these support resistance zones is from the 1 hour or whatever. So once price breaks the previous zone and then breaks and retest, that signifies right there the shift in the trend, right? Or that's what they teach anyway, right? Wait for it. This was the main break right here. It came down, it didn't break, and it didn't retest. It broke, came back up, retested, broke. So right, so once we start to see that now, that signifies the uptrend, right? So at that point, what I do is I take the Fibonacci, and once I see it starting to get a brand new, I would call this a institutional candlestick right here. Once I see that strong push to the high, I want to go from that high to that zone. See, from that zone, I go from that high all the way down, not to this low right here, because this would have been the low. We're going to go to the previous, always the previous. Not to this low, but to the previous, all the way down here. That's where we'll take it to, okay? And as you see, when I drag it across, the golden ratio, 618, right? You see 618? You see how perfect that is. And you see our entry right before the market moved up right here, this yellow spot. And another confluence I see on this is, of course, we got the white uptrend right here started because our downtrend ended and we seen a shift in momentum, right? So once we see that break is usually when we want to take our Fibonacci from that high it creates, or from that zone, whatever it goes to. Usually it's going to probably be either the zone or the high. Pretty much same thing, just it depends on how it plays out. And you go from the high to the low on the uptrend, and look what we see, right? Right here, once price came up there, it broke, right? The 618 level is the key factor right here, because that's where it came at and it bounced up. And like I said, I'm showing you this on the 4 hour because the 4 hour, the higher time frame tells the story. The lower time frame, as you see, if we was on the lower time frame, we would have what? Trends inside trends, right? You go trend, right? You go trend, uptrend, downtrend, uptrend, downtrend. Look, same thing. This is in the 4 hour. So same thing going on these smaller time frames. And you can do this, like I said, with the Fibonacci retracement. So once again, I took that from that high. Let me erase this Fibonacci and do it again. I went from this high right here. Once it broke up like that, I went from that high, because I want to know where it's going to retrace at and come down to before it continues. So from that high all the way down to this low. Like I said, not the previous low. You want to go all the way down to the second previous low. Okay? Right there. Come all the way down to that low. And like I said, 618, it never went past 618. It just wicked around that whole area every time it went there. And right before it made the move, it shot up. So like I said, one of the confluences of this Fibonacci will help you, as well as we see this white uptrend, as well as seeing what we see with the blue vertical line, pink vertical line, what sessions. It's around London and New York. So more than likely, London broke it out and New York reversed it. Simple, right? So same thing happened again, right? So boom, we get in right here on this entry. So once we ride it all the way up here, we're going to ride it as long as we can, right? Once we start to see a retrace, that's when we want to take our Fibonacci again. I'm going to delete this one so it won't be too many on the chart and it don't confuse you. That's what we do is take our Fibonacci again from that high, not to this low right here, right? Because that's where we just got in at, right? We got in and rolled it all the way up. So not to that low. We're going to go to the previous one, which would be down here, right? Bring it up to the high. Bring it up to the previous low. What do we get again? Perfect when we drag it over. We get the Fibonacci. We get the golden ratio. Once again, this zone, right? Erase this one. So what we do is we get in, we ride it up. We ride it. We ride it. So right here, this happened. This was actually so nice. This manipulation, because when we see this is what I mean by manipulation. Resistance, resistance, and then it breaks. Why? Because so many people were looking at the lower time frames and all they seen was these highs. Like it's coming to a high, so they tell you to sell at the high. So many people decided when they looking at these lower time frames, they selling. But if they was on these higher time frames, they see this trend. This trend, they see this trend line. Look where we at, and as well as we just came out of a downtrend and we're shifting up to this uptrend. So you want to go with the trend. You want to buy with the trend. You just need to know when the trend is not your friend. So when the trend is not your friend is when we see it create a high, it breaks. So we got another structured zone over here, right? You go back in the past if you need to see the zones right here, the one I'm moving. See this strong one? Strong area right there, that strong zone. Strong, we can keep going back, it's pretty strong. Now, you have to identify them zones, them support resistance zones to help you understand too. Now, it breaks a zone right here. Comes back down, retest. Instead of retesting it and continue, it didn't. It broke that zone, right? Now, it broke that zone with a strong institutional candle. This is the 4 hour. So now at that point, I'm looking for a sell because I know what's going to happen. That strong move, I know what's going to happen. So what I do is once it make that strong move to the bottom, once it makes that bottom to the bottom, I go my Fibonacci from that bottom to the high. This is on a downtrend, okay? From the bottom to the high on the downtrend. Look what it gets us. Let me drag it over this way so y'all can see that 618. Golden ratio right here. See that? Perfect entry. You would have got in right there and sold. Massive pips. How many pips we even caught so far, to be honest? Let's see. This is gold, too. This is gold. So, y'all know gold. That's over 800 right there. Gold moves something serious. Oh, almost 1,000. Like, come on. Come on. This is 1,000. This can and will, for 1,000 right there. This can and will triple your account and help you be more profitable and consistent, as well as other factors. Twin trading, understanding these structures and knowing when to trade. The main thing is knowing when you get manipulated. That's why I feel like you losing every time you take a trade because you're not knowing what's going on. Like I said, on these higher time frames, you're not understanding the structure. So boom, we get in right here, right at this yellow circle. We, boom, drop, catch all that. That's 1,000 pips. And how many days was that? 2 days, really. Got in right here. Yeah. 2 days. We could stay there in 2 days, whatever. Once we'll get out once we see all this choppiness, consolidation going on, right? All this choppiness, right? So another thing, keep in mind that, like I said, when we going on using the Fibonacci on the downtrend, we're gonna go from the bottom to the high, right? To get our entry, right? Same thing. Once it make that strong move, we get out. Once it start doing all this consolidation, but of course we want to identify that move, because from that bottom, not to this high where we get in, but the previous high all the way up here will give us our next entry of where this market should retrace to. Look what we've got, 618 right here. You see it? Yellow, perfect entry right there. Boom. Get in. Look, it even gave you another chance. But you see where it came to again, the 618 right here. Information gave you another chance for probably like a week later, gave you another chance. Now, you have to be patient with these. This Fibonacci retracement and using it on this 4-hour will help you understand which direction the market is going. So from there on, you can trade on the smaller time frames. You just need to know the overall move. So you need to trade inside those trends, inside this massive trend. So this is just going to help you identify this. So all this other space and time to trade, this is also trades you can be taking in between here. Like I said, I'm identifying these major 618 golden ratio moves that's happening. So that way you can understand a better idea of using this and using the higher time frame to understand that. So same thing pretty much happened. Like I said, from the low to the high, we get in right here. It gave us a second chance. So say we got in, say we didn't get in right here, or if we did get in, you see this upper opportunity right there for that information. There you go. You take that, you trade that all the way down. Once it starts to make that move up, that's when we want to take that Fibonacci, right? Go from that low, not to this high, but to this previous high up here. What we get again, perfect. Golden ratio, 618. There go your entries. Look at this, precise entries, y'all. Precise. Right there, you get in, you write that sucker down. And you twin trade doing this. You write it down. That's over 1,000 pips right there. 900 or something. So you write it down. But like I said, then again, you can catch these other moves. That's when it retraces. When it retraces, look, from this low, from this low all the way up to this high. So if he's on a smaller time frame, right? Look, I don't know if y'all can see it or not, but it's right there from this low right here. That's the downtrend from the low to this high. So in the 15-minute or something, look at that perfect golden ratio. Look at that entry right here. Look at that. Y'all see it? Let me zoom in a little better. Look at that 618 golden ratio right before it dropped, right where it hit. Look. And then also, this is right around, again, London session and New York session. I'm not making this up. You can go back test this and see it for yourself. Join the Telegram channel. Hit me up. Give me a DM if you got any questions. I'll gladly help you. So, like I said, then again, we catch that move, we write it down. From the low, not to that high, not to this high where we just got in, but for the previous one right here, up here now. Not all the way up here, from this one now. It's going to give us our zone, our entry. Look when we scroll down. Look, 618 golden ratio. Perfect entry again. You got in and you just writing this sucker down. You could have got in right here too. I'm pretty sure if we went to the smaller time frame and retraced that when it did that. So it'd be from that low right here to this high right here. Should give it to us. See, look. That's crazy. Look, from this low to that high, that little move, look, to catch this little extra retracement. If you got out or a little early, got scared right here, or wanted to get back in, look, right here, 618, where it retraces at. It retraces right up to there before you can get in and continue on with the trend. Not making it so you can back test this. Once again, like I said before, when the trend is no more creating those lower lows and lower highs no more, we want to start to see if this trend is going to change. And more than likely is what we look for when it starts to break zones. So of course it came down here to this zone, this bottom zone, and it didn't break. It decided to break a previous zone, which it already made over here, right? The previous support resistance zone, it made over here. It broke that. Once it broke that and shot up, that's when we want to take our Fibonacci from that high, right, to the low, right? From that high, oh, I'm sorry, I took it from the wrong high. So once it break, and this is actually, this right here is something where the support and resistance zones come in handy. And you have to understand that because right here, you see we got a zone, right? You see price acted as a support right there, support, then it broke it and acted as resistance, right? So once it break, right? Once it break that, we want to cake. This is a little trick. It cakes from this zone. We take from this zone to this zone, from this bottom zone. Like, because this type of move right here, when you catch the beginning of that trend, since there's no lower low to go to, because usually we want to go to the previous low. Since there's no lower low, on a 1 hour or 15 minute, you can see this so vivid. You just take it from that high, from that trend, from that zone. So you remember that zone down to the previous zone. In between that space, it should get you that perfect entry. And like I said, from that zone to that zone, we get it again. You zoom in, 618. There you go again. Entry right here. Right at what? New York, you see the confluence. You see the confluence, right? Perfect. 618, golden ratio. Also right here, this blue vertical line represents New York session. So Asian session had happened. London broke out to the low. New York reversed it. You'll see that perfect daily structure on a 15, 30 minute or 1 hour. You can see that. More likely you'll see it perfect on a 15. 1 hour would be kind of nice. A nice look at it too, but you might miss it too. Might miss the entry if you ain't paying attention. And like I said, you could trade all these days and in between this too once you understand this more. You can trade this on a lower time frame. Once again, you see over here, we got our low, another low. That's that macro W formation we look for in generational wealth. We look for those macros when it ain't tested a higher low in some weeks or month. We're gonna usually get a reversal off that first test to it. So that's a jewel for you. So same thing, we got a support resistance zone right here. We see it acting as support and resistance, right? It broke it right over here. Another zone right here doing the same, pretty much the same thing, right? So it broke. And say we do it from here, from this top to bottom. Look, it never retraced right there, right? Cool, whatever. Break again, we're gonna go from that high. Cool. You understand? This is what you do. But then it never come down. Okay, cool. We're gonna keep going, right? So we go to the next zone, which I don't even got a zone even drawn in here for it, but we'll mark right there, right? Support, good. Now it does it again. Comes up to that high, breaks. So now what we're gonna do is come to this zone. When it comes to this zone, right? Because like I said, we're gonna keep doing. If it don't come down and retrace, it's going to come down to that 618. Look, from this high down to this low, What do we get, guys? Perfect. 618. This is zero drawback. If y'all haven't been paying attention, too. Zero drawback. Zero drawback. If anything, we might go on a red for a couple of seconds. You're gonna go instantly in blue. Perfect. Golden ratio 618. So like I said, you just have to understand which direction the trend is going and how to trade this. You know how to trade this when the trend is going up and when the trend is going down. And it's gonna get easier and easier over time. Yeah, trust me, it will. So say for example, we got in right here, we rolled it all the way up, we stayed in. Say you got in again on this little area because you did another fib level on it, a golden ratio. You got you another entry and you just planning around whatever with the root. Now we see it's just starting to consolidate here. It made this high it's gonna make right here, and it's now starting to retrace from not this low right here. So you made this high up here. Now from this low, we're gonna go down to this low right here. Perfect. Again, 618 level. See how strong this zone is, how the prices is wicking past it, it's coming back up. And then again, it just takes off right here. New York session. Again, same thing. Once we get in, we ride this sucker all the way up here. Once it starts to retrace again, we take our fib level, we go from that high. All right? From this high, not to this little move it made right there, not that zone. We want to go to the previous one, which would be down here. Where we just rolled it, got in at. Right there, 618, up again. Ride it up again. And like I said, this happening over and over. Look, we can even from this little area from right there, it just happened. From that zone to there. It ain't even broken now, it's playing games. So this Fibonacci level retracement tool can be very useful when back testing it correctly. And like I said, you can do this on multiple time frames. You can do this on a 15-minute time frame. You could possibly even do it on a 5-minute time frame. You just have to understand the structure, understand the direction, understand which way the market going. So that way you know you're on the right track. It gets easier and easier too once you're looking at these higher time frames to see this, because it's going to be more vivid and a clearer picture. You could probably minus some of the support and resistance I got on here due to me leaving all my drawn tools up here. But this tool can be an asset to your growth during trading. So utilize that. Thank you.